One of the things that my friends and wife talk about is I don't have much of a life. I sit around and read, and I love to read people who know what they're talking about. And as you know, if you're a regular listener to Money Talks, I guess it was in February 2020, we ran a major conference called The Coming Bull Market in Commodities. Well, one of the people that I've enjoyed reading over the last couple of years is Lewis James. He's founder, CEO of Lewis James LLC, but he's the principal analyst and editor of The Independent Speculator, which you can find at www.independentspeculator.com. I'll tell you more about that coming up. But Lewis, thanks for finding time for us. Much appreciated.
Well, thanks, Mike. And it's an honor to have had your attention for so long. In these days of what have you done for me lately? Boy, 2020, that's a long time.
Yeah. Well, and of course, you have a global perspective, which I love to read. I mean, you're well aware in the commodity markets, but also drilling down into the stock market too, and the commodity pricing, all of that kind of stuff, which I think, I think the place to be if you're trying to protect yourself against devaluation of currency, et cetera, but it's not quite so straightforward. So I wanted to start with, you look at, for example, right now, you're writing a lot about the demand and the reduction in demand right around the world. And of course, the impact that will find on commodity prices.
Yeah, well, I mean, you say protection. I think it's important to distinguish regular commodities from monetary metals.
Mm-hmm.
And in terms of people thinking of protecting themselves from the downside, clearly monetary metals have a very different safe haven role than, something like copper or oil, which can, will, and always has taken it on the chin if we go through the ringer. So the 30,000 foot view, Mike, is that I don't buy what Team Soft Landing is peddling. I think the U.S. labor market is much weaker than it appears. I think post-pandemic labor hoarding, amongst other factors, has greatly distorted the picture. And it's funny, you hear people, even Powell, saying things like, oh, we're in uncharted waters. And then they whip out their chart and say, this, we have the tools, this is what we're going to do, right? So I'm just, I could be dead wrong. Team Soft Landing certainly looks like they're winning right now. They're out there running their victory laps, but I just don't buy it. And either I'll be right or they will. I think within months, we are at the point where either I'll have to concede that I got something seriously wrong, or the scales will fall from their eyes soon. So that's my view. And that being the view, it makes me much more inclined towards monetary metals, or say anything I can regard as a safe haven asset. Real estate counts, but it's less liquid. And it makes me much more cautious of things that I like on the commodities side, like oil, which has been demonized and starved for capital. That's actually very bullish for the price of oil and for the people that can actually produce the stuff. Copper, similarly, everybody's, this green agenda requires so much more copper than the world is producing, and yet nobody wants to permit mines. So, there's opportunities like that I think are fantastic going forward. But if I'm right and Team Soft Landing is wrong, we go through the ringer first, and that makes me very hesitant to get into, energy minerals writ large or industrial metals, that sort of thing right now.
Well, that's a great summation. By the way, I love that distinction between monetary metals and I'll call them industrial metals, as you say, that are going to be impacted directly, demand for oil, demand for copper, and other commodities that way. I think that's a very important distinction. But that is a fascinating debate when they talk about, is there going to be a soft landing? I'm not sure. There's been wishful thinking on that. The people who are presenting that, I don't think they have the best track record. I'm not trying to knock them, but I mean, it's a complicated business when you look at the overall economy that way. But I mean, I'm looking at the latest stuff coming out of Japan is worrisome. China's worrisome. If I'm talking about increasing demand, that I don't see it coming from many of those areas. And as you say, I think it's highly questionable and a lot of wishful thinking when I hear people talking about the U.S., the labor market doesn't look as strong. So I think that distinction you're making is a real key, and I hope everyone picked up on it there. And I know you make it in the Independent Speculator, but I think it's one that needs to be applied when you're looking at all of the commodity markets.
Yeah, and I think perhaps you're being very gentlemanly and kind when you say optimistic thinking. I look at somebody like Janet Yellen, who gets on TV and says, I see no reason to think that there might be a recession. Well, this is the person who saw no more crises in her lifetime. And guess what? She hasn't fallen on her sword. She's still there telling us about the things she doesn't see. And to my mind, it beggars belief that any serious adult can take such a person seriously. This is a political hack saying what her boss tells her to say. Has nothing to do with reality, in my view. So I'm willing to be a little bit less gentlemanly. Lobo, it means wolf. So I'll bare my wolf fangs here and say I just call BS on these people. And Powell, appointed by a Republican, supposedly. I think the central bank's head's job is to lie to the public. And I'm not just being inflammatory or throwing that out there. I mean it quite sincerely. I think they think that they have to say whatever they have to say to steer the ship of state, right? And to, manage expectations, because in their worldview, everything is about confidence. You can't shake confidence or the con game comes down. So their job, I think, is quite literally to say what they think they have to say to get the economic results they think will be achieved by the jawbone. Truthfulness has nothing to do with that, and so I'm not just being insulting or whatever. I'm being literal. I think it's Powell's job to lie to the public and say whatever he thinks will help. So I'm a bit of a rant here. Sorry, Mike, but
No.
I think it's important to understand that these sources. Independent of your politics, it wouldn't matter if I was a Democrat or Republican. I would say the same thing. These people cannot tell the truth, and therefore what they say should be discounted.
Well, we had such a great example when we're sitting there, and I'm proud to say on this show, we were talking about inflation a year before, while they were still saying there was, transitory. And I'm going, like, this is absurd. Keep in mind, they were still saying that in November, early December of 2021. And think about the energy crisis that was happening already from, arguably you could get an earlier date, but let's say September, where prices were skyrocketing in the UK. And I'm going, and I think your point, though, is a very important one for people to understand. It is a confidence game. And at that point, they wanted to make sure, or they were going to say anything they could to tell people, oh, don't worry, inflation's not going up. In other words, we won't have to raise interest rates on all the borrowing, to get people involved. Right, like, who the hell's going to lend the government money if inflation's at 4 and I'm getting 1? I just think that's actually, I think, the key point in economics and finance today is it's all about confidence. And why wouldn't people's confidence be shaken when you look around the world, you look at different things? They haven't solved the energy crisis whatsoever. In fact, I think they've done a good job in working to prove that they haven't learned anything from what happened in the previous year. I'm laughing because I'm going on a rant now.
Does not the Fed have an unbroken track record of failing to predict any recessions? Like, when have they ever predicted a recession? It's quite startling that they came close this time. Unlike the Bank of England, which actually did call a recession, the Fed, the staff projection was for a mild recession this year, and they've rolled that back. But even when the staff made that projection, the FOMC was having none of it, and Powell said, "No, that's not the view of the committee. My view, or any." Mm-hmm. So he disavowed even that very mild and gentle slowdown that the staff called for. So, I mean, that's an unblemished track record, Mike. So it doesn't matter. Again, Republican, Democrat, Libertarian, anarchist, whatever. The track record says you cannot and should not place any weight on what they say.
So let's talk about what we should see instead of what they're saying. And I'm with you, as I said. No, but I mean, as your goal is with the independent speculator, for example, and you're the due diligence guy on Twitter, but the role is to protect people or help them navigate this kind of an environment, which is very difficult, obviously. I mean, gosh, look at that dramatic increase in interest rates. Obviously, some people are being very hurt. When I look at the surveys in the States, the huge percentage of people who don't have $1,000, in their savings. Or in Canada, we have had literally, it's relentless is the right word. Over 50% of Canadians are really feeling the squeeze now with inflation, with higher interest rates. And they haven't even renewed their mortgages. I mean,
that's coming, right?
Yeah, that's coming still.
Student loan moratorium coming off. There's much, it's maybe worth pausing before we get whichever branch you want to go with this. But it's worth pointing out that when we talk particularly about the U.S. and U.S. statistics, we're not being myopic. We understand there's a world out there, and I've actually been beating the drum that it's very naive to think that everything could be hunky dory in the U.S. when China is not reigniting as hoped, when Japan is a perennial basket case. Europe is slow. The Latin American countries are pivoting to easier policy because of the
Yes.
trouble they're seeing. It's a global economy, and yes, there's a new trend towards deglobalization post COVID and all that. But that took decades to build. It's not going to be unwound in a couple years. So there's huge vulnerability, and this is an aspect of American exceptionalism that I would take exception to. And particularly important for resource investors is that commodities are priced in dollars. So it's not that I don't realize that there's a whole economy just as large across the pond, or this growing dragon in China. I understand that they're very important, but commodities are priced in dollars. And while that is the case, we need to look at things that are going to move the dollar, and inversely, most commodities. So that's why we have conversations like this. But sorry, I'm not sure where you wanted to go with that, Mike, but I wanted to clarify, because we keep coming back to U.S. statistics, and people will say, well, don't you realize there's a world? And I say, yes, that's part of the issue.
Well, that's a great point you're making. I mean, you're right. I experienced the same thing. Why are you talking about this? Well, especially being a Canadian, let's talk about their economy too, because if their economy tanks, ours is almost impossible not to tank, and also globally, as you say, the global implications are huge, and the dollar implications. I mean, that's a monster debate right now. The BRICS getting together or not, are we going to change the US dollar and the trading system? And by the way, I make a distinction there between the US dollar as a store of wealth, people thinking of it that way. And in that way, I think we're already seeing the exodus, with more to come, but we're seeing it, people moving out of the US dollar and preferring Bitcoin as an example, or gold as an example, or in my case, I prefer oil as an example. I got more faith in oil than I sure do in the US dollar, looking at it only from that perspective. But on a trading basis, I think you're talking as you just said, this is a big system. It's going to take a number of years. If people, a lot of people for political reasons are hoping the dollar declines. Forget the economics, it's the politics. But what do you feel about that whole discussion now?
Well, as you say, there's political reasoning, and I'm not above politics myself. I'm on the libertarian end of the spectrum, and I have my druthers for how I think things should be done, and I object very much, state interference in the economy. But my role as the independent speculator, as the due diligence guy for my audience, is not to, ramble on about politics or try to convince people to save the world my way, or adopt Loboism, or, whatever I believe. My role is to help you make money. And, it's not that I'm throwing the ethics out the window. It's that I need to look at what's actually happening in the marketplace, not what I wish would happen.
Yes.
Like take the green agenda and the electrification. That is such a huge global trend for all resource investors, affecting everything. The least affected might be gold, but even silver's affected because of the solar panels. It is also industrial, not just a monetary metal. So never mind copper, lithium, and all these other things that are so profoundly impacted by this agenda. So I get pushback from readers is like, oh, well, Tesla shouldn't even exist. It got government grants and subsidies, and fine. It's true. Never mind that. Our goal isn't to beat up on Tesla or to right all wrongs like Don Quixote tilting at the windmills. Our goal is to make money. And the fact is that governments around the world are pushing this big time, whether they should or they shouldn't, they are. And you know what? It's not just those evil, dark cloaked powers that be behind the hidden curtains. The people out there, our dear beloved fellow brother human beings, they want this, especially the younger generations. These electric cars are popular. The consumer wants them, whether they should or they shouldn't, whether it makes sense or not. That is a market reality. And so if your goal is to make money, you can't just say, well, I'm going to check out what's happening because of what I want to have happen. That's not how you make money. I'm going a bit of a rant again for you, Mike. But
that's a key point. Let me just interrupt for a second, because I would say that's in fact the skill you need as an investor. I mentioned that we did a coming bull market in commodities. You've just elaborated exactly why we did that in February of 2020. And it was because it doesn't matter what I think about it. It doesn't matter that I have concerns that there's no way, by the way, the electrical grid can handle it. There's no way, as you alluded to just a bit earlier, but I mean, the lithium, the cobalt, for EVs, the copper in every aspect of it, we're not close to that stuff. It doesn't matter. they're going to do it anyways.
That's right.
And the way you
And if
described
you
it, I
had
think is
any
perfect.
doubts, sorry, let me jump in and agree with
Yeah.
you, because if it's reasonable to have doubts, particularly you have a global pandemic, you might think that reason would set in a little bit, and they might step back and say, "Oh, well, this agenda is very expensive. It's not just going to cost a bunch of money; it's going to make the global economy less efficient. Maybe we should take a step back and deal with the pandemic first." No, they double down. That was all the more reason. And then a war. And you think, okay, we're on the edge of potential World War III. There's a land war, a kinetic war in Europe, for God's sake. Maybe we should take a step back and think about, putting extra burdens on the global economy. No, we're going to double down. This is all the more reason we got to have energy independence, right? So all the more reason to.
Well, one of my favorite quotes. Sorry, one of my favorite quotes last year was John Kerry arriving early, in the Ukraine war and saying, "I hope it doesn't impact our climate change goals."
Exactly.
And I was going, people are getting bombed.
So anybody who thought that, okay, reason will prevail at some point, or reality will step in and they will take a step back. Clearly, they have shown that that's not going to happen. Until they push that, the train goes off the cliff, or that level of reality, maybe. And you know what? I actually think, for all the things that we say can't happen, this makes me very bullish on the necessary minerals, because I actually think the NIMBY thinking that has plagued the mining industry for so long, or the extractive industries in general, I think that will cave. I mean, at some point, push will come to shove, and people will realize, well, if we want, batteries and solar panels and electric cars, we have to mine the metals that go into these things. And I think people will realize, in the first place, there's just not enough. We got to permit these mines, the nice mines, the better companies that make an effort to do things in a cleaner way. I think they will get permitted, even in first world countries that really would rather not have it. And the other aspect is, if you push all the mines off to the third world, you're going to degrade the environment more, because there are looser environmental standards in most of those countries. They're making efforts, but it's clearly easier to get, let's say, an operation approved that has lower environmental standards in some desperate country in Africa than it is, say, in Canada, or never mind, in Europe, in Western Europe. So to the savvy investor, again, whose goal isn't to make political points, but to make money, you look at the companies that are positioned to benefit from this. And I do think that the green agenda will ultimately trump NIMBY thinking, and we will see projects that currently might seem unpermittable become permittable, and that change in value could be huge. For a speculator here, we're not talking about a safe investment. I'm talking about, for a speculator, to try to position yourself where the wind is blowing, where the hockey puck is going, to quote your great Canadian philosopher Wayne Gretzky, right? This is an example of some things in this space where you can see very clearly where that puck is going. And I think there's money to be made going there, getting ahead of it.
And of course, you alluded to a moment ago, okay, so we should look at what are the minerals that they're going to need. So I mentioned copper earlier. I may even put that at the top of the list in a way of sort of a can't miss, because you're going to need it no matter what: the electrification, the grid, the EVs, and renewables and all that. But what's your list there that you'd keep an eye on that sort of has a real demand surge over a possible supply? We don't have the supplies. That was an awkward way of saying that. We don't have the supply.
Well, I actually quite agree with you on copper is absolutely number one, because no matter which technology, even if you go with hydrogen cars, right, that wouldn't have lithium or cobalt or nickel, or as much anyway, you're still going to need the wires, the wiring in the car, and the batteries, and the charging, and the electrification writ large that goes with that. The hydrogen cars, I don't think, change the overall story. So, but the hydrogen cars are still kind of an if. I mean, they're coming along, and there's people pushing in that. But right now, for better or for worse, the lithium-ion battery is sort of like the VHS of these technologies. If you understand my metaphor, you've got hair to match my beard. I don't know how much of the audience is with us on this, but Betamax VHF, everybody says that Betamax was the better technology, but somehow VHS got there first. It became the standard. Everybody just adopted it, and that's where we are with lithium-ion batteries. That said, there are changes happening there now, like the the LFP batteries are really coming in strong and taking greater market share. So that affects your nickel and your cobalt. There's still lithium there. Anyway, I'm digressing, but not too much. Point number one was I agree with you about copper. Like, hands down, any circumstance, copper is my number one industrial metal. The other one is actually going to be lithium, because the alternatives that are most advanced are still lithium something batteries, like lithium sodium, lithium iron phosphate, right? There's still lithium something. And that's a more developed advanced technology. So, I'm not a buyer of lithium ahead of the recession, or copper ahead of the recession that I still think is ahead of us. But the other side, I've been late to the game on this because lithium is not rare. But it is becoming, quite apparent that, on the other side, the green agenda is going ahead. The demand will outstrip supply. And it's, at least for the investment timeframes I have in mind, the next few years, like maybe 10 years from now, supply actually catches up and recycling catches up. But as we build out the fleet of electric cars, I think demand is likely to outstrip supply. And that actually makes me bullish on lithium, more bullish than I've been all along. With new understanding. Now, nickel, not so much. Cobalt, not so much. Anything else, we'll see. Hydrogen, that will be years before that happens. The metal implication of hydrogen is platinum, and there's a lot of people hanging their hat on higher platinum prices because of the hydrogen cars. Well, there isn't a hydrogen charging station on the entire island I live on of Puerto Rico. Like, I literally can't buy that car and expect to drive.
Yeah.
I could look at it as a statue in my garage or something, but and there are a lot of people on that boat. Until that changes, I really don't see that having any meaningful impact on platinum prices. So the one that it leaves me with of other, sure things is I like silver quite a bit because it goes into the solar panels. And in the near term, silver's industrial aspect may hold it back and it may underperform gold. Actually, I would say in the balance of this year, I think that this gold-silver ratio would likely widen because of this. That said, on the other side, silver becomes the win-win metal. I think you'll have fear as the recession kicks in that will support the safe haven demand. And then as you exit the recession, you'll have the industrial demand because it is necessary. It's one of these metals, not labeled a critical metal, but it's very essential to the electrification of the world. So I like silver a lot on the other side. And then one we haven't mentioned, I did say, I'm not keen on energy minerals going into the recession. The one exception there is uranium. And I don't know if you want to go down that rabbit hole.
Honestly, that was my next question. I mean,
okay, well, again, let's go there then. Even if you want hydrogen cars in the future, you're going to need to get that hydrogen somewhere. And okay, it can be a byproduct from some gas fields, but in the quantities that we're talking about, you really need something like the Hoover Dam or the nuclear power station to generate hydrogen. Is frequently said, and I agree with this view, it's really more of an energy storage means than a fuel. Yes, you do burn it, it is a fuel. But it takes energy to get that hydrogen. It doesn't, you can't just, there's no hydrogen geyser that you can just tap. So in most cases, you have to make the hydrogen. You have to put energy into making it so that you can burn it and get the energy back out.
Yeah.
And I understand that there are also hydrogen fuel cells where you don't burn it, but those have other issues as well. Anyway, the point is you still need to get this hydrogen, and that's going to take energy. And I think one of the obvious answers to that is you can't build the Hoover Dam anywhere. It has to be in a certain place where you can do that, whereas you can build a nuclear power plant anywhere you need the energy. So I like it, and I don't mean to focus just on the hydrogen, but it's an example of why nuclear is so great. It can provide 24/7, 365 baseload power, whenever you got to have it for hospitals or airports or whatever. That's the most reliable kind of energy we have. And it's non-carbon emitting. So you combine that with other green technologies and you have a greener approach to electrification than anything else. So I think nuclear made sense anyway. Just the global population is growing. We don't like coal anymore. Even gas is a bridge technology. You're still, natural gas. It sounds great. It's natural, right? Well, yeah, but it's still got carbon in it. And you burn it, you're still putting that carbon in the atmosphere. So just the global population alone and the reality of places like India and China needing more energy
Yeah.
than any amount of coal, gas, everything could provide them, makes nuclear an obvious choice. And then on top of that, you have the ESG agenda providing it multiple tailwinds. So I'm extremely bullish on uranium. I call it my highest confidence trade this year because while there's this appearance that team soft landing may be right, that's a headwind for safe haven assets like gold and silver. So as much as I love gold, I have more questions about gold in the nearest term than uranium. The other yellow metal this year is actually the one that takes the crown from me for my highest confidence trade. And the one thing, and I know my fellow uranium bugs hate it when I say this, but I feel I owe it to the audience to always say, this presumes no major nuclear incidents. Fukushima was a tsunami, and it was the tsunami that killed the people, not the nuclear power plant, but it still scared people. More important would be Chernobyl. Really, 3 Mile Island was a nothing burger. Fukushima was a tsunami that caused most of the problems. Chernobyl was the real deal. And if there was something like that now, I do think that would whack uranium prices, that would whack the uranium stocks, no question. They would crater on news like that. So I think it's important to say, yes, it's still a speculation. As solid as the thesis seems, and we have, fundamentals of supply and demand, and we have technicals. People are exasperated with uranium over the last year or so, but you look at the long-term chart, and it's a thing of beauty. And you've got the narrative, you've got the ESG agenda.
Mm-hmm.
You've got Europe pivoting back despite Germany pivoting back to nuclear. And of course, the BRICS countries going gangbusters as fast as they can.
Yeah.
So the demand is already there. We don't need to speculate that there will be increasing demand. We can see that now, Mike. The big risk here would be a literal blow up that could blow up your portfolio. And those are rare. As I say, it's really only been Chernobyl has been the only serious one. And people worry about the Zaporizhzhia plant in Ukraine. But you know what? I think that thing is a fantastic advertisement for how safe nuclear power is. It's in the middle of a freaking war zone. The thing's been shelled, it's been shot up. All this stuff has happened to it and not a peep out of it. It's done great. So, yeah, I'm a bull, and I just have to put that one caveat in there. It's a total lightning bolt out of the blue. We'll never know if that might happen until it does. But until it does, and I think it's unlikely, I think the uranium thesis is very solid. Higher prices, I think they're baked in the cake for this year and going forward.
Well, and look at Japan returning to nuclear as an example. Obviously Fukushima, but that's their judgment on it, an increase in nuclear power. It seems like every week I'm certainly opening up about somebody else, whether it's South Korea. You wrote about Georgia. I wasn't aware of the Georgia nuclear plant coming on. First new plant in the U.S. in 12 years. As you wrote about, that demand side is there. I think it's a core position, actually. I think uranium is a core position.
The Japanese thing is really eye-opening because, they were the one, that Fukushima happened to them, right?
Yeah.
And they shut down all their nukes. And for them to say, you know what, it really is safe. And, we've learned our lessons that, the rest of the plants, we can go there and we have to, and we need this energy. For them to do that is really striking. And even Germany, which in Europe was the one that most strenuous objections to nuclear power, they did shut down those last 3 reactors, but they delayed that, which was kind of a hell freezing over type event. And even Greta Thunberg was telling the Germans that they should keep those plants operating because, the Germans were opening up new coal mines. Yeah. So, as scary and evil as most people think uranium is, coal has become the absolute devil. Yeah. That's the archangel fallen. So, it's really striking. This is an idea whose time has come again. I firmly believe that. And I have more uranium in my portfolio now than I ever had. The only stock on my shopping list right now in the face of the uncertainty of the recession is a uranium stock. One final point on that. Baseload power, Mike, right? 24/7, 365. This isn't like deciding, times are tough. Maybe we don't have to go visit grandma this weekend and saving on gas money. This isn't discretionary. So I'm not saying that uranium is going to be entirely recession proof, but it is much more recession resistant than any other energy mineral. And right now the powers that be have done a good job of punting that down the road. So it is the one resource speculation right now, because I got a lot of questions, Mike. There are a lot of things I don't know.
Yeah.
But this one I'm so confident of that I'm willing to put more money into play right now on a great uranium stock if I can find what I've missed.
Well, as I say, this is a great reason. And I want to tell people that you can get a free, the Speculator's Digest is free. Just go to www.independentspeculator.com, www.independentspeculator.com, or follow on Twitter, Due Diligence Guy, small caps, Due Diligence Guy on Twitter. Louis, thanks so much. Fabulous stuff.
Well, I appreciate you giving me the chance to share what I think about what I do, and I encourage people to check it out and see if they like my way of doing business.